before I start, also the usual disclaimer. All right, whatever we say, whatever we are sharing is just our personal view. All right, it's not representative of Philips Securities. We're just sharing for educational purpose. Hopefully not for entertainment purpose, lah. All right, you take this. Hopefully it can work into something. Hopefully you might take some action. It helps you to direct your thoughts or even your action. Okay, so I know it's a bit early, right? We have got about 330 more days to the end of 2024. All right, it's a good reminder. We want to start strong. At the same time, we want to end strong too. Okay, I think at this point in time, so a lot of people are just spring cleaning their houses and all. I'm throwing out quite a bit of stuff. Okay, so at the same time, you might actually also consider spring cleaning your portfolio. All right, you might have a lot of penny stocks from the penny era. I can't remember all the names already, and those were classics. All right, if they're still inside there, they're not doing much. All right, you might just want to speak to us. Is it a time to really let go, focus on better, higher yielding stocks? Okay, so it's also a good time to really do that. All right, before the Chinese New Year start, or if you don't have time, hopefully after. Okay, so what I covered today already, Roy just shared. I'm going to just do also a quick recap of 2023, so they help us frame what we can be looking forward in 2024. All right, after that, I'm going to just give you a little bit of tips on how to just start your investment in 2024, because for us, some of us, maybe we're new to this investment game. You've been hearing your friends, oh, I made this from this stock Nvidia, go up so much, I also want that kind of thing. All right, you get yourself interested, and right now, the internet is a buzz with all this kind of thing. All right, so just giving you a little bit of a stepping stone, what to look out for, how to invest. All right, then of course, are you bullish or bearish for 2024? Okay, Bitcoin. All right, recently also gaining quite a bit of traction. I'll just go through very little simple parts of it only. Okay, we're not the crypto expert. All right, but later we'll just go through some more just to share our views on it. Okay, and then our views, our summaries, and ask me anything. All right, hopefully we try to cater a bit of time. If you've got any burning questions, anything you want to ask, reserve it for the end. If not, you can always in the chat group, in the chat function, just type out your questions, whatever you have. All right, so for recap of 2023, very easy, ABC, that's what I'm teaching my youngest daughter. All right, so the AI team was very strong, right? Till today is still fronting the S&P, the Nasdaq. A lot of people tell me the Magnificent Seven or what. To me, I don't really care whether it's the one that's only pushing the market up. As long as it's green for my portfolio, I'm in those stocks. My clients are in those stocks. They are making money. I'm not too concerned whether the breadth of the market is really moving. All right, the S&P is up. That's all I need to know. All right, why is it front by? It's mainly by the AI. All right, your Magnificent Seven, I think now left Tesla. Right, they left Tesla behind. Okay, bonds. Right, B for bonds. Bonds did well for 2023 as expectation of interest rate cutting. Okay, C. All right, everybody thought China would really prosper, but actually China cui. All right, later I'll just show you the chart. I think this was one of the more disappointing teams that we had. Everyone we know all got this wrong, so admittedly we also got this wrong. All right, but I want to talk a bit about the allocation later. All right, so getting it wrong also is not the end. All right, so being wrong in part of your investment thesis, that will happen from time to time. Right, so don't fret over it. Just ensure you have the right allocation. So if later towards the end when we have time, then we'll just go through on the proper allocation of that. So I'm just going to show a quick video, just 2 minutes on what we shared about 1 year ago. All right, so hopefully you were there. If not, take a look at what happened. All right. On the wall of worries, okay, pessimism of disbelief, the best foundation for stock market recovery. So you can see even last time, in 2020, COVID, all the news coming out is bad. What happened? Market still rally. Every time you hear all the bad news, you hear all the faces like that, or all the very sad face, then that's when maybe you should start to take note. Okay, hopefully not, you also not like that, the very shocked face. All right. Okay, this is just one or two stocks that actually kind of looking at that you might want to consider. If you haven't heard, this thing called the ChatGPT. I myself also went to try. It's quite fun. This whole new AI thing can help to do, the recent news can help to do homework or that kind of thing. All right, the tech giant and Microsoft is the one that is integrating this ChatGPT into its Bing, Azure, and everything. So actually, Microsoft might actually be one of the big players in the AI, and this whole AI space is actually it is growing. All right? And this ChatGPT can really grow quite big. So one of it is actually Microsoft that might benefit. So looking at it intently, all right, there's always downtrend line that hasn't been broken. So over here, it might actually be hitting this trend line. Okay, when the moment it has any pullback, I think those might be good opportunity to get into Microsoft. Of course, Microsoft not only does the AI. Okay, it's one of the biggest company. Whenever you use your if you're a Windows user, there's Microsoft also. Okay, you cannot run from it. All right, Microsoft Office, Microsoft Team. Okay, that's how Microsoft grows. Okay, they have almost a monopoly over it. So I think this, if you want for 2023, I think this is one of the stocks that you can actually be keeping a look. In terms of the team, all right, for the AI team, there's always different teams. You know, you got your clean energy. So right now, if you look, the AI team, ChatGPT is actually gaining a lot of popularity, a lot of traction. So take a look at Microsoft. Okay, these are some of the levels that you might look if it comes down around like 241, 232. Anything below, you can start to accumulate also. Then we can see a triple bottom. Okay, of course, when it comes here and it starts to break out, if it starts to break out, wait for it to retrace. So it can be like doing like that, come there, come down. Okay, you can consider an entry for long term. When it comes to trading, of course, then it's a bit of a different strategy altogether. All right. Nvidia also, I think this is this is one also that actually graphics into the AI. So I think this is also one that you can be looking at. Look at it. A bit like Microsoft, you see the chart. Actually, Microsoft had just hitting the downtrend. This hit the downtrend has actually broken above. So if we do see a retracement coming down to 172, that might be an opportunity to start accumulating some for the long term, if you believe in Nvidia. All right. Okay, S&P 500. All right, so that was last year. Okay, those were the slides that we were sharing. Hopefully, with that, you all pay full attention to the next 45 minutes or so. All right, whatever we share, we really pour our heart in, really did countless hours of research. So hopefully, our clients will be able to benefit from it. Not every time, oh, I missed it, and oh, very 可怜. Okay, so this is all what we're sharing. Microsoft, I'm not sure whether you follow this stock, but we were already saying this quite a bit. Okay, I think it went up to about 400 plus. It's just sitting in my portfolio. Just yeah, I'm not selling it lah. All right, Nvidia also, I think entry was around maybe 200 plus. All right, I think last night it hit about 700. Okay, so that's about 3x or so, but that's not really the main focus. I think the main focus is really getting yourself in, learning how to get in and why also. So that was the theme for 2023. All right. Okay, bonds also were good. All right. So whether this will continue to flow, I'm gonna just elaborate a little bit more on that later. All right. So this was the little disappointing part for us. Okay. Where S&P was up about 20 plus, 24% in 2023. Nasdaq was up about 40 plus %. All right. China went the other way around. Hong Kong, the Hang Seng Index went the other way around. I didn't get the memo right. Okay, everybody had a very high hopes of it. The COVID opening and regulations, you know, being a little bit more tame. All right, so it really disappointed most of us, or all of us. All right, it came off 30%. All right, the Hang Seng Index. Okay, so that definitely came as a bit of a more of a shocker. All right, I think that's why we always emphasize also the proper allocation. All right, if you allocated all your funds into Hong Kong last year, I don't know why you did that. I don't know whether you've been attending our webinars, but yeah, that, you know, Hong Kong always remain about 30% or so. So although you're down, overall we still see a positive upside. Maybe not as much, but due to a portfolio, a proper balanced portfolio allocation, I think that is prudent. All right, if you know just put all into US, of course you were like, hey, I've made a lot, but one day what if US comes down and Hong Kong goes up, then you'll be a bit trapped. Okay, so don't beat yourself up too much. Okay, if you got this wrong, all right, a lot of people also got this wrong. Just remember you are able to bounce back. All right, so hopefully we're able to take you back. All right, so looking forward, there was past. Okay, you can't change the past, so just let's look into the future. So today, when you're here, you're able to do something. We'll be able to help you, or we're able to, right the wrongs. Okay, but before that, before I go into 2024 our views, all right, I just want to do a little poll. All right, okay, able to see it? So are you bearish this year? Are you bullish this year? Are you sheepish this year? or I don't know. All right, so I just need you all to just help me to participate in it. All right, then I just to get everybody's participation. All right, just the next 1 minute or so. Are you able to see the poll?
Oh, yes. Yes, I see the pool.
All right, are you able to help so that at least we just know how's everybody feeling? All right, we get the sentiments on the ground. All right, just another 30 more seconds. All right. I think there's something wrong with the poll. It did not. Sorry, are you able to click the thing?
I
Yeah,
can't click it. I can't click. I don't know about the rest.
I don't think. Yeah, no wonder. I can't. Are the rest?
But there are people who reply.
That's strange. Sorry, a bit. Yeah,
Can click this submit
yeah. You
action.
just help me to see if you can click. Cause I can't click on my side also. So yeah, I
Yeah.
just wanted to find out everybody's what's their. Then see whether got the correct answer. If got the correct answer, everybody can go back home early. Yeah, our class dismissed. All right. Okay. So hopefully if you have done it. All right. I'm gonna end poll. Let me see the results. I can't see anything on my side. I'm not sure why. So never mind. I think we got to skip this part. All right. Sorry for the technical error. All right. So how to start investing for 2024? All right. So just this three letters CDC. I'm quite sure you all should be very familiar with this. All right. The government gave the CDC vouchers, right? So far, I think about 90% or so already have started using it. All right. So for this, so that we can help ourselves to remember. All right. CDC. Okay. All right. C is the cash allocation. All right. How are you going to start investing? All right. Then your diversification. And then the last part is charting your chart to time your entry. All right. So you got to use some chart in order to know when you kind of want to get in. Okay. So for cash allocation, all right. Firstly, you got to determine how much cash you want to invest for the year. All right. You cannot go in today like, oh, today my friend tell me this stock good. Then you go and buy. Right. Today, well, I see Meta or Facebook today move up. I just decided to buy. All right. You do that, you will die. Okay, so please don't do such a thing. All right, so every year at the start of the year, for me at least, I'll determine how much I think my cash flow will come in, how much I have, what part of my savings, all right, that I want to use to invest. Okay, so firstly, you got to be very clear on how much cash you want to be investing for the year. Let's say 10,000. All right, it will differ from people to people. Some people maybe 100,000, some people 1 million, some people 10,000. It doesn't matter, right? So long as you're in your correct allocation, that's fine. Okay. What we suggest is at least 10 to 20% of your income. Okay, so you have to be 10 to 20% of your income, which you allocate to at least invest or save. So over this portion, right, the long-term wealth. So just now Roy has gone through, right? You need some protection that at least will take up about 10% of your income. All right. The rest will be a bit of your expense, sometimes 50%. Okay, CPF cannot run away, right? Okay, that contribution. Then the rest you should actually really start saving and doing your investments. Okay, next one, of course, spend less than you earn. All right, that's one very prudent statement to be said. All right, it's hard to do. I know now the Chinese New Year. All right, all of us are like buying all your Chinese New Year goodies, your bakwa, your pineapple tart. All right, go slow on them. They are cut down on those, cut down the calories. Not only you save calories, you also save money. Okay, so that's one important part. All right, diversification is also very important for me personally. All right, I think you have watched some YouTube and some of the videos. All right, some people just only go into Tesla. Tesla is their biggest holding in their portfolio, or just Tesla and Apple or what. All right, so what happens if Tesla crash? Tesla is not performing as well. All right, you see, you might suffer. All right, if you really just pick that one stock and that one stock don't move every day, you'll be praying hard. All right, I also don't think that how it's really supposed to work. Okay, so we often tell our clients to diversify a little bit. Okay, hold about 20 stocks. Okay, that's about for me personally, that's what I do. But before that, I also see. I think some people are able to see the poll. I just want to do this. All right. So just to know the later part. All right.
Is your poll out, Kel?
E...
I don't see it.
Why is it not out?
Results in the chat.
Sorry? It's in the chat, is it?
Result is in the chat. You open the chat, people put the results there already.
Oh. Are you able to see it? Okay, I've got another poll. Just bear with me 1 second. All right. All right. Okay, you see it?
Okay. How many stocks do you hold? Yeah.
How many stocks do you hold? All right, 0 to 10, maybe you're new to investing. All right, 10 to 20, 20 to 30, 30 to 40, 40 to 50, or you only got chicken stock right now, mala stock or laksa stock. All right, so tell me to do this. Then later, if anybody could, if you could just publish it. I don't know why today I'm not able to see it. All right, so as you do it, I'm just looking at the chat. All right, so actually 48% of you are actually bullish. 4% of you are sheepish. All right, and the other 41% you don't know. All right, that's fine. All right, so you come with a clear mind. Hopefully, after this webinar, you all will take home something. You all will be convicted or able to see our view. All right. Okay, so only 7% bearish. Wow, all already quite not bad. All right. Okay, I'm going to stop it now. Where did he go? Is anybody able to just help me later? All right. So
I can see it. Do you see?
I don't see it.
Oh, let me see.
All right. So can you just read out to me, Roy, if you...
Okay, let me take a look.
All right. So, okay, majority, 40% is about 10 stocks. All right. 31% is about 20 stocks, 10 to 20. All right. Very little is holds from 20 to 50 stocks. All right. So,
0 to
firstly, also is your comfort level. All right. I personally hold around 20 plus to 30 stocks. All right. If it's too many, also we cannot see. All right. So the importance of the different sectors also, so that if one sector gets hit like 2021, your tech sector was hit quite bad. 2022 also. All right. So if you don't want to see your portfolio get down too big, all right, it's important to have a bit of like your consumer staples. You have your REITs, right, to help you to cushion off all those. Okay. Right. So let's say if we are allocating about 20 stocks. Okay, so each stock has about 5% allocation only. So let's say if you have a say 20,000 or so, all right, you want 20 if you want to have 20 stocks, all right, each stock you're going to only allocate about 1,000 for the year. All right, so we have to stick to that discipline. If it's too many, and if some of your stocks already have hit your maximum allocation, all right, so you only take out 5%. So every time you add, right, it shouldn't go above, all right, so that you have quite a well diversified portfolio. Right, at the same time, you don't want to gain. Oh, today I think some better, like Meta is so good, right? You start adding every time. All right, then at the end of the day, you realize, hey, my Meta stock has now taken up 50% of my allocation. All right, so once you hit 5%, you let it naturally, organically grow on its own. All right, then you look for other stocks, other quality stocks. All right, to get in. All right. Very diversified to various sectors also. So don't be just all too concentrated on one. I know a lot of people usually on the tech sector. All right, I'm also slightly heavier on the tech sector. All right, so that's where the return, the boost will come. But just take note, all right, when it comes to the crunch time, when it comes to the downside, cannot complain. Like, well, how come my portfolio down so much? Right, because when it actually gets up a lot faster. So just take note of that. Okay. And at the same time, also don't over diversify. Kelvin say must diversify. You go and buy every stock from every sector, right? Buy only the strongest stocks, all right? So I can see so far everybody is only holding around 20 or so. That's quite a healthy number, but don't go and 50 stocks cannot see. Sometimes we review the client's portfolio, so many stocks, how to see. Some of the stock also never see before. Okay, so please don't over diversify. Not at the end of the day, so many things go up, then so many things go down. You net become even, then there's no work done. All right. Okay, charting your entry. This is a little bit more abstract. This is a little bit more science to it. All right. Use your indicators. Use whatever you need. All right. Don't blindly just go in and just buy like that. All right. Don't just think, oh, I got this stock good. All right. If you understand this, when it comes to a support level, wait for the prices to retrace at least. Wait for the things to come down. All right. Don't wait for the right valuation. Okay. Don't just throw into the stock. Like right now, you can see also clearly in US it's quite overextended. You have not seen us given much stock alert or stock call, okay, because it's just too expensive. The levels don't make sense yet. Okay, so we're just actually waiting for the pullback. All right, a lot of people are very impatient every day. See Nvidia moving up, ASML moving up, SPGI all moving up. What to do? My advice, don't FOMO. Wait for the time to come. All right, if you missed it, let's just wait. Okay, even the stock is very good, it's fundamentally strong. If you get it at the wrong price, you're gonna have waited out very long. Okay, for example, if you get in 700 at Nvidia, for all you know, it corrects back down 20% or so. It comes down to about 5+. All right, how long more will it take to go back to 700? And somebody gets into it for 540. Okay, so that's important also. All right, so timing your entry helps. Okay, so don't chase the stock. Right now, it's too far off. All right, so we're not doing anything, just holding. Okay, watch for the intrinsic value. These are some of the websites that we use. All right, to calculate, to help us value the stock. All right, you need to know how much this stock worth. Do your calculation. All those, if you like, all the discounted cash flows, your DCF, your forward PE, all this kind of thing. It's important to be able to do. We do it. We look at it. That's why sometimes we have the confidence in the stock. All right. If you don't do all this, you just hearsay. My friend say this one. My friend say. My father say all this. Wow. All right. You're gonna get burned quite bad. All right, because they have their own methods, and their methods might not be aligned with yours. Okay. Just to go through also the global indices, what have they done so far? So 1 year ago, okay, just 1 year, Nasdaq so far we have seen the strongest due to expectation of interest rate cuts. All right, it is your tech heavy, so you can expect it to be a bit higher, right? So 41%. Congrats to those who actually got into the QQQ or the Nasdaq ETF. All right, SPX, this is your S&P 500. All right, like doing well also, I would say 20%. Gold also always one of the what they call the safe havens. All right, up in the when the economy is a bit of the turmoil. All right, gold usually shines a little bit more. This is also part of a diversified portfolio. If you want to have gold, I think that is fine. All right, just remember your proper allocation. All right, you can see over here in Asia. All right, sadly, STI is down 7%. China 16%, and then you got your Hang Seng Index. These are the three laggards in Asia. So yeah, hopefully they'll be able to perform this year. Okay, year to date, that means starting from this year till now, all right, still leading the pack is your Nasdaq, all right, followed by S&P, then gold, and once again, no prizes for guessing who's at the bottom. Okay, so 1 month, still the same thing. Okay, so these are the table format. All right. Okay, so right now we're in February. Okay, this is actually what I call a bit of the seasonally weaker month. Okay, so from research you can see actually February rough history is actually the third worst month for S&P. Okay, so brace yourself, do be prepared. If we see any correction or pullback, all right, don't be too surprised. All right, see the seasonality slack from Bloomberg. You can see usually over the past 30 years, all right, February also has been sometimes a down month. All right, I might sound quite bad, but I'm actually hoping for February to be down. I can't wait for it to be down, but maybe some will be like, oh, come down already, then they start texting, oh, this is a crash, wow, is this the what? To me, I think I'll take this opportunity. If it can come down a good 10 to 15%, I would, considering re-enter the market and put in more positions. Right. So pullback is perfectly normal. All right. Don't go in. I think people are very influenced by the media. They see a lot of news, and that's part of the job, right? The news media outlet is to sensationalize things. You see a lot of this is calling for the recession, the worst recession, it's coming. You have all your doomsday predictor, and you see what happens after that. Okay, it's meant to really stir up some fear, make people scared. So don't be too scared. If you are ever scared, just drop us a message. Hopefully, we can calm the nerves. So you can see, usually there will be pullbacks in the year. Okay, so don't be surprised if we see one happening this month. Okay, so 2023 had a correction, tends to happen most of the year. So this year also, we might be expecting a correction. Okay, so 10% correction once a year at least. So I think that's perfectly fine. But the media might portray something else, right? 10% correction, oh, this is the end of it already. Oh, the Fed's not going to cut. The Fed's going to increase the rates. Of course, we see the data as we go along. All right, don't just jump in blindly. We can see whether inflation is starting to move up, or is it starting to come down, drop, starting to cut, or what. Okay, so do always just check back if you are unsure, right? So when the 3% dip is, can occur about 7 times. So this is perfectly fine, all right? Bear market actually only once every 2.7 years, 2.7 times, okay, once every 2.7 years, right? So we actually seen 2 bear markets in the last 3 years already. So maybe the bear already had its time already. So the bear should go backstage, all right? So right now, the bull should be quite in control, all right? But that doesn't mean it goes one straight line, right? You'll still go up, go down, go up, go down. Okay, just to wipe out all the weak hands. All right. Okay, so what happens after a 20% gain? As we can see, last year after 20% gain, maybe a lot of talk like, oh, I think it will come back, you think it will go down, you think it will go up, I don't know. All right, so just to take us through this statistics, all right, this probability. Okay, what has happened whenever it has gone up 20% after a 20% gain last year? Okay, you can see out of that, right? Only 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. Only 13 times out of how many years? Right, you can go in 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 17, 34 years or 35 years. All right, only about 16 times. 6, 3, 6, all right, 12 times or so, it had actually ended up negative. All right, so over here, these are the stats. Okay, it was up 65% of the time after it gained a 20%. Okay, it was only down 12 out of 34 years, so 35% of the time. So if you were to make just a wise guess or just a calculated guess, all right, if you could just type on the chat, all right, do you think this year will be up or down? All right, after 20%, anybody just want to make a guess, up or down? Anyone? Up or down? Or don't know? Down. Possible? All right. So 35% of the time it might come down. All right. So 65% of the time it will go up. Okay. So see whether you want to be in the majority or you want to be the minority of that. Okay. But later I'll just go through a little bit more. So hopefully that boosts the confidence of whether it will go up or down. Okay. So the average return after 20% up, we're looking about 8%, 9%. Okay. So this year, if all things well, also we could also still look around about there. Okay. Okay, the S&P historical performance, we can see over the last 43 years. Okay, S&P is up 33 years, down 10 years. Okay, so for anyone, right, it's actually up 76% of the time. So if you were to just make any guess, all right, if you just somebody ask, hey, Hey friend, what do you think? This year the market will be up or down? All right, so the chances of you just staying up, right, you're already about 76% right. Okay, so do you want to be 76% right, or do you want to be just at 34% right? All right, which has a higher probability if you just see from the stats, all right, being going up or coming down, right? So actually, without much education, without much knowledge about the stock market, you can see that overall, right, 76% of the time, it can actually move up. Okay, so you don't really need to go and do all your crazy calculations, plow through the books, do countless hours of research. If any year, right, if you just take a up view, okay, you're actually kind of right 76% of the time. Okay, why? One of the reasons that S&P is actually up, because there's a lot of index rebalancing. All right, companies get kicked out, the weaker companies get kicked out, then the stronger one comes in, right? And over a long period of time, companies want to do well, right? You don't want to be kicked out of that, right? Very paiseh, very malu, right? So you want to have your earnings grow. All right. Okay, so this is one of the bullish cases. These are a few things why we think it could be bullish. Okay, Fed holding rate steadily, okay, indicating 3 rate cuts. All right, so that's definitely good news for the market. As you can see, right, in March, most probably we might not look at cuts or so. Okay, Fed has already signaled that there's not really any rocket science there. It's not doing any poker face over there. All right, so 84% chance that it does not cut. All right, the only important one they might be looking at a cut could be in May or June. Right, this is the market consensus. 55% chance of it cutting in May. All right, you can see Fed also like to play a lot of games on, like say we might not have rate cut. Sometimes Fed say we might still continue on interest rate. Then suddenly in November, December, they say, hey, we have paused the then looking for cut. That's where market continues to rally. So take whatever Powell says with a pinch of salt also, right? Check back with the market action, how the market reacts. Okay, so far the market is calling bluff on Powell. All right, we could look at around June-ish. All right, we got to also just continue to monitor the data, whether inflation is starting to creep up or not. Right, so far it seems tame. So I think we are okay. All right. Okay, so what happens when the Fed pause rates? This is what happens whenever these are the few times that it pause. Right, 3 months, 6 months, 12 months, we can generally see it's kind of up. Okay. Another bullish case. Why I think it's bullish. All right, the PMI index below 50, we can see is actually a contraction. All right, above 50, you can see expanding. So this is if you want to know what PMI is over here, all right, it's just report surveys of the public, the manufacturing firms. Okay, so we can see there's expansion coming in ever since like November, December. So we can see the economy is picking up actually. Inflation is being tamed. So that's one good thing about what's happening in the market. So it's trying to find a nice balance of expanding and having to have a nice inflation number also. So not overheating the economy. Okay. All right. Next one. Okay, our 10-year yield, as you can see, has been the one guiding the market, especially for the Nasdaq. You can see it actually plummet. All right, came down all the way even to below 4%. It's going to 5% around November. So within about a month or so, it actually came off. And this is actually a good thing for the market. So if it continue to come down, okay, you can actually see the markets probably firming up. All right. One good thing or bad thing, all right, if you're in the company, I'm sorry if you got retrenched, okay, but technology companies are cutting jobs and Wall Street likes it. Okay, so if you're in the market, you want your stock to be moving up. So as they cut jobs, right, you can actually lift up the company's price because companies become leaner. All right, your profits, you can less manpower, and because of AI, all right, you can actually replace someone's job, or you can actually take a lot lesser time to actually do your work, right? Thankfully for all those, so you might actually cut down your manpower. Somebody can take on more, all right, with the advancement of AI. So that's what is really creating all this kind of layoff, all right? One reason is because during the COVID, they are hiring quite a lot. Okay, so right now they're keeping it lean, and the market actually likes it because you can see their profit actually growing better. So once again, whoever's in all the companies, I know there's a lot of layoff coming off. We got Lazada, so many, Meta, Google, Amazon, everybody's just cutting. Meta, Microsoft is cutting. Every company we know is cutting. Grab is cutting. Yeah, so non-stop. And I was just researching layoff. Oh, it's long list. So, but if you're the market's like this, right? So make sure you get yourself upskill and make sure you're well protected. Yeah. Okay. So you can see shares of Google, the parent Alphabet, right? We should lay off 12,000 last month, up 15% this year. Okay. Well, shares of Microsoft, 10,000 employees laid off, up 6%. Same thing, up 90%, 19%. Okay, even though all the layoff. Okay, so market likes it because as you get leaner, you are able to transform the company, you're able to move forward faster. Okay, another case of bullishness. All right, the MMF, we can see that actually about 6 trillion, right, from this February 1st, it actually increased the money market fund. This is where so sometimes I think you've seen a message, draw a lot of message about the money market fund. This is where they go into like the bond market, the short-term bond, right, to give a bit of a safer returns, a bit of a lesser but more stable, less volatility. All right, so we can see because now interest rate is higher, a lot of people are parking their funds into the MMF. Okay, I personally don't really buy T-bills and all because, yeah, I've done my own maths. Okay, T-bills offer you 3 to 4%, right, per annum. All right, if you just got into the S&P last year, just buying the SPY, you're already easily 20%. If you got a little bit more guts and you know what you're doing, the QQQ, that's about 40%. All right, that's already 10 times of whatever the T-bills could do. So T-bills could appeal to anyone differently. It really depends on your stage. All right, depends on your investment philosophy. It depends on capital preservation, capital growth, why you need it for. Okay, what instrument is going to take you to the end goal? All right, if you're trying to build a retirement fund, how much do you need? At what kind of rate do you need to go? Okay, so that's important. So at times people ask me about T-bill, like, ask me about it. I just tell them I don't really go into it. So there are different reasons for it. So you can imagine now there's about 6 trillion inside MMF. The moment the rates start to drop, it is not as attractive. Where can this fund go to? Right? People managing this fund, do you think if they go in, they start trickling to the market, just 1 trillion into the market, you can imagine how much it will spark. So this is one of the things that we are looking at. So hopefully when the market comes down, these funds might start shifting and then you can help to prop the markets. Okay, AI, once again, this is nothing new, or last year was relatively new, but now I think everybody's quite plugged in already. They know how to use all your ChatGPT. All right, AI is set to grow. This is just numbers. Okay, it might even be higher. So we continue to look at your favorable Amazon, Google, Nvidia, AMD, ASML. All right, but right now it's really, some of them are a bit too stretched. When the time comes, if you're in our Telegram group, we will usually blast out to inform you when's the time to take a look. Okay, so this is just a summary. Okay, if you need to take a picture, I'll just give you some time. Okay, so Fed party paused the rate hike. Okay, looking to cut around June. That's my personal take. All right, I could be wrong, but it doesn't really matter as much. You see the price action, see whether the market is pricing in that or calling power bluff. Right, PMI data improving, is also expanding. 10-year yield is coming down. Although I know today or yesterday it started to come up. That's all part of it. That's fine, so that the market can come down, and we need the market to come down. Right, there's something that to cause the market to come down. Some news for it. I'm just waiting. All right, layoff happening. All right, so everybody take care. Okay, 6 trillion in MMF. So when it starts flowing to the market, hopefully it can help to prop the market up, bring it up to a new high. Okay, AI continues to power the market. Okay, right, this year also we're going to have the presidential election, right? What are the implications? So far, we can see most of the time, right, whenever there's a presidential election, US presidential election, not Singapore, over here. Okay, if it's a Republican, all right, average return about 15%. Okay, if a Democrat was elected, about 7.6%. So usually when we see on a PE, market also tends to still be up. All right, so right now I think these two are in the running. Joe Biden is kind of old already. They should just rest already. I mean, it's really some. Have you seen all the interview also? It's not that coherent already. So yeah, I wonder when will Taylor Swift run for presidency already. Okay, these two lesser of two evils maybe. And hopefully, if really Trump wins again, it's a bit more favorable to China, right? Okay, how about crypto? Okay, you hear us mention a bit about crypto. You seen us send some messages here and there. All right. So just to share a little bit, I cannot say I'm the expert on crypto. All right. I also know that much only. All right. But I feel that this is one thing that it could be part of your portfolio. Right again, a disclaimer. All right. The proper allocation for me is about only 5 to 10%. All right. It's not my be all and end all. Okay, so that's very important to get a location right. Don't after tonight, hey, can I say crypto good or everything? You mortgage your house, your car, you sell your everything. No, that's not the right thing. That's not the right messaging today. All right. Okay, what's exciting about Bitcoin, about crypto? All right. There's this thing called the halving every 4 years. It takes place in around April to May of this year. Okay, so what it means halving? Anybody knows how many Bitcoin coins are there out there? All right, because there's a limited supply. It's a bit like gold like that. There's a limited supply. Okay, if you want to know about more about crypto or Bitcoin, you can always just go Google it. It's a chunk of info. It's just too much. And this is not the right platform to go through what is crypto, what is this, what is blockchain. No matter how much I look at it, also at the end of the day, I cannot totally understand it. So, but I do want to be in this space. So it only takes up to 5 to 10% of my portfolio. Majority is still in stocks in the US. So disclaimer, all right? So please also do the right measurement, okay? And recently also we've seen the Bitcoin ETF being approved. So that lends a little bit more legitimacy into Bitcoin. But that said, when it's approved, usually then the gains might not be as crazy. Gone might be those days that you can see like 10x, 20x within 1 week, 2 weeks, that kind of craziness, because now it's a bit more regulated, or it's become a bit more mainstream. All right, we might not see that crazy kind of gains. Okay, there's still that possibility, but just don't be overly excited, or like, hey, this are gonna go like 30, 40x like the good old days. We might not see that kind of gain as it gains traction and into the mainstream already. Okay, so interesting. Okay, but local brokerage over here is tread with caution. All right, so do note that these are some of the ETFs that's already come online. Okay, you can take a look which one if you ever want to get it. You also have to do what they call the CRCKA. Okay, those are important to safeguard, because we are buying an ETF. You need to have some knowledge. All right, so if you're buying this once again, take up only 5 to 10%. That's my allocation. Everyone can be different, but if you are in doubt, just always drop us a text. Okay, just something interesting that analyzing. Okay, every 4 years, I said that we have halving of the Bitcoin. So that means half the limit comes, half the supply come down. And in just plain economics, when your supply comes down, demand remains the same or stronger, price tends to go up. Okay, so the last time it was done was around May 2020. Okay, so every 4 years, remember, was half. Okay, Bitcoin is around 9K then. Okay, although when you're half, right, you might expect, oh, immediately jump up. Okay, you can see the jump is actually gradual. It took about 1.5 years. Okay, from 9K go up to about 70K. How many times is that? About 8, 9 times. Around there, right? 7 times, about 7 times. Okay, for 1.5 years, 7x. Okay, today I'm not going to talk about all those altcoins, all that kind of coins. We're only looking at this and maybe Ethereum. Okay, I'll just give you a bit of knowledge or just a bit of insight. Okay, so I'm not here to go and debate anybody or this altcoin, that altcoin, Solanas, all this kind of thing. No, all right, although you can do your own studies, do your own thing, I'm just focusing a little bit more on this. Okay, so in July or so, that's where another halving took place in 2016. Okay, Bitcoin was around 700. It also took around 1.5 years. It went up to 18,000. Wow, sombo. All right, this went up quite a bit. How many times is this? 20 times? 20 plus times. Okay, but you can see actually after the halving, you can see yeah, this was maybe 20, then this got about 7-8 times. So actually it kind of decreased. So right now, you know, Bitcoin is around 40,000+. We might not see like what 20x, that kind of thing. The halving might maybe give you 3 times or so, according to the statistic or according to how it's been performing. And you might not see immediately going up, right? It might take months, but right now with technology and with all information coming out, we might see a short spike or so. Okay, so that's what we have for crypto. Okay, all right. Okay, so of course to be a little bit more balanced, but hopefully you can take the hints where we are veering towards. Okay, so bearish case, you can see could be the extension of Middle East war. All right. Unfortunately, the war in the war between Israel and the Palestinians. All right. It's still not really coming to an end. Okay. If more countries get involved, it becomes a widespread war. Of course, then we're going to see more bloodshed, even in the markets. Okay. So hopefully this does not become a full-on kind of war. They're able to do something about it, have some peace talk, and then get it over. All right. Okay. U.S. commercial property market. This also is a bit of you know, it's at the back. Okay, because of all the interest rate. I'm not sure whether you've seen the news yet, because you know that the property's value come down and all, so it actually triggered some losses in the Japanese bank. Right, whether this can become a bigger run, nobody really knows. But yeah, it's on the back. Whether this can become a bit of a black swan event, right? Because we can see if interest rate continue to remain high, a lot of companies might not be able to pay, you know. Then we can see, you know, banks taking on loan, they're not able to repay the bank. Then you can see it trickle down to everyone and then cause another bubble to burst. Okay, so this is one of the things that could cause the market to come down. So, and of course, also recession fears is always that at everybody's back of mind. Okay, why Fed has to cut rates is also could be because the economy is stalling. All right, it could be because of a recession. So we could see markets coming down like that. Okay, this is what actually happened last year. We can see the valuations for US S&P was only 16.7. Okay, most of them were actually under. Right, so Singapore under. You can see China also under. Right, so actually US is a bit right now, quite overly expensive already. So it could come down. All right. I just got news DocuSign laying off 6% of the workforce. I think Snap yesterday. So yeah. Okay, China right now is very undervalued. So there is some value over there. So US being the most overvalued, so that we could see some pullback. Okay, so in summary for 2024 is easier also. ABC once again. All right, AI team continue to front. Okay, bonds to continue to do well. The extra C, I'm not kicking out China. All right, just remember it's just a smaller allocation. All right, crypto now is part of your diversified portfolio. Remember I said I only go to 5 to 10% and I'll just keep it like that. Okay, so if you have any questions, just feel free to ask us. Okay, so this is our view, our summary. Okay, pause, rate cuts on the table, inflation also starting to come down. Take the chance of a pullback to time your entry. If you don't know how to read the charts, don't know what, just drop us a text. If you're trading with us, if you're with us, yeah, we usually try to give you some prompts on where to go in. Okay, I think we've done that through the year, but whether you took action is also another thing. Okay, because don't I tell you all that, oh, but then my friend tell me this, my friend tell me that, then and then after when you go up, you got buy. Oh no lah, I scared. Then that one also we cannot do anything. But we also have a solution for that. If later we have time, we can just share it. Okay, so also like we've been sharing also bonds, right? If you want short-term duration bond, there's quite a few instruments that can actually get better yielding than your banks. Okay, let us know. We can always drop you the product to look at. Okay, high quality corporate bonds also can take a look. Okay, we are looking at a positive close for the S&P of around 10 to 15% for this year. So still remaining positive, still remaining bullish for the year. Okay, and then just 5 stocks that we're looking at. I know we're coming close to the end, so bear with me. Hopefully this will help. But this is not all the stocks that we're looking at. Right now, this is a bit more favorable value. So at this point of time, we are looking at this. Okay, Palantir right now, he actually reported a very good set of results just last night. Okay, yeah, you can read out really much on this, what it does. It's really about like data and all. Okay, so yes, two, all right, main platform, the Palantir Gotham. This is for the government, all right, so it does all the agency work, help you mine all your data, all right. Then they got a Foundry. This is for more customers. Okay, target market is about 6,000 companies with at least 500 million in revenue. All right. Okay, so what kind of Palantir does help the CIA, you know, with all the data, you can track all the terrorists, the bad people, the insurgents, and then you can actually better plan your ops. Right. So with data, it can help you, you know, give you the probability where it's here. I think you've seen those movies, right? Osama, hunting for him, what are the odds, where this kind of thing. I think they can help you do a lot of calculation, help you do all the planning. For those people in the military, I'm not sure that you use this or not, but yeah, this is a very, you know, game changer. It helps you. Okay, so at the same time also you can help, you know, companies, okay, like Airbus, you have to identify and, you know, quickly respond to all the manufacturing acceleration of the production of the A350s. So I think this is very useful. Okay, then help BP analyze the drilling data, whether to add more drill, add more here, add more there, that kind of thing. Okay, so valuation of Palantir. Okay, if you go Simply Wall Street, subscribe, you can see current price $16, it's slightly undervalued. So a fair value is about 28. Okay, of course, take this as a pinch of salt. However, they crunch the data. It's really, however, you know, use a DCF model. You can do your own model. Okay, so we do look at this just to, you know, get some reference and, of course, do our own calculations. Okay, so chart of Palantir, I think tonight is probably gapping up to about $20. Okay, so with that, there is a gap. Usually when market has gaps, it should cover. Like you see this gap, right? Move up, eventually will cover the gap. All right. Okay, so this is almost covering. So if this gap here, what should you do? If you have no position in Palantir, I think you could consider just a small starter position. All right, in this. Okay, and then after that, hopefully wait for the pullback. We might not know when the pullback comes. All right, but I think if it's around this price, you could just get a starter position, not all in. Remember, we also go in batches. Don't one time go all in. Okay, and we're going to look at the upside even more than 20 plus. All right. Okay. Fortinet. This is a cybersecurity company, so it's a bit like your we shared last time, Cloudflare and CrowdStrike. Okay, so this is another cybersecurity company that we're looking at, because you know how much nowadays all technology and stuff. Okay, so you do need cybersecurity, data protection and all. So this is one of the companies that is one of the biggest. Okay, so develop a self-security solution like firewalls, which is very important. Okay, so you have over 705 customers plus. So almost every industry or what would need this kind of cybersecurity kind of product. Okay, so this is what it does. It's a lot of things to read. You can go and take a look. Okay, so expected to cost, so you know, there's all this global cybercrime, all this. Okay, it costs companies about 10.5 trillion damages annually. So global security, they are all spending money to really prevent all this, all the attacks, all the hacks. Once you get all your data breached or you get your data hacked, it's going to cost you a lot of reputational damage too. So this is a growing industry, and you know, part of the AI front also, this probably be a good company to consider having. All right, so current price is also still undervalued. So right now we are definitely want to look at undervalued stocks. You don't want to be looking at overvalued at this point in time. Okay. Fortinet, I think around here you can take a look, hovering around 63 to 66 level. I think there's one place that you can consider entry. Then after that, we see whether the market pulls back. Hopefully the market pullback can come down to about $60. That's where you can consider another entry. All right, so at the same time, remember when you diversify, also remember how much you're trying to put in. All right. Alphabet, this one definitely no need introduction because this one came off, so that's why we're looking at. All right, it's currently undervalued. After it came down, after the gap down, you see it actually has a nice strong support about 136. But if the whole market pulls back, I think I'm looking at it coming off more. All right, that's where then I will continue to add shares. Okay, I think recently the results wasn't as good. the market just took whatever reason it can to just beat down such stocks. So whenever such stock come down, I think it's a good time to enter. And these are the levels to take a look at. Right, so that's the third stock. Fourth stock, United Health Group, UNH. All right, talk about portfolio diversification. So I think this one in the healthcare sector. Okay, so don't everything just in the tech sector also lah, huh? No matter when it come down, you also get hurt badly. Okay. It's one of the largest healthcare company in the world by revenue. It's the largest. Okay, you also have this healthcare insurer. Okay, number one in net premiums. It's a healthcare group operating over 150 companies in US, Europe, Asia Pac, and Middle East. Okay, it's among actually the world top 10 largest company. Okay, you can see it's actually serving around like 50 million customers individual in 2022. So it's a pretty big company. Okay, right now also it's still undervalued. This fair value, I really don't know, can be 1,000. All right, don't quote me on this. All right, so just take everything with a pinch of salt. You know, it looks undervalued. Of course, we do other metrics, but yeah, we don't have time to share everything. It's already hitting 9:30. All right, so I say around this price, so I think we could take in a first batch if you have not gotten in United Health. All right, if it really pulls back, the market gives us a chance, go back to 475. I think that's another level, and then maybe at 450, and just wait and see after that. All right, Coinbase, I think we shared this. This is also a crypto related. All right, this is a crypto platform that people can trade your crypto lah. All right, you can buy, sell all your coins. All right, so this is one of the biggest beneficiary where people are trading your Bitcoin. So I think you also received a message when it broke out around 88 at the time, kind of went up to 180. All right, so if I'm long term, you didn't sell, I didn't sell lah. So now come back down. Okay, so that's part of the investing cycle. All right, how I know that then will come down. If I know surely I sell top, then buy back. Okay, so hindsight, you're 100% on. Okay, so right now it's coming down. I think if it really does come down to about 100, I think that's where we can take a look around nice support. The indicators also are kind of at the low. Okay, once it hit the extreme bottom, I think you can consider taking a look. And then if it just nice comes in the halving, just wait for it to take off. All right, at the same time, remember your allocation is important. All right, that's all I have. Just nice, we at 9:30. Okay, if you need anything, right, if some of you all might be new, right, if you're not a client, you can be our client today, right? If you want to receive timely and actionable trade alerts, I think just now we're just sharing, Roy is sharing things that we do for our clients. So if you want also, you can always make an appointment. We can always meet one-on-one, do a holistic review. One thing, I haven't shared yet, I think just now, right? One thing that sometimes clients, ask what stock to buy. I think one important thing is why you're buying that stock. Why you want to take on the excessive risk? Why you take on that more risk? All right, if to do more, but why you want to get more? All right, what's the end goal in there? So when you meet us, all right, hopefully we're able to help you to churn out, how much you want, how much income you need for retirement. All right, then with that, what do we use to get you there? All right, whether you need, all this will come to all this play. All right, put it onto Excel. Let's say your, suggested was around, right, your color allocation. If you allocate like that, right, you only get a 3%, and will 3% help you get to your retirement goal or end goal that you need. All right, so if you come, then maybe we can do some numbers. If you need to be more exposed into the equity realm, into the stock realm to get a higher return, then we can adjust, and that's where you want to look to buy the stock. All right, we don't just buy the stock today, because my friend say good, I think not bad. Right, although like, oh yeah, he has doubled for you, what does that mean, the bigger scheme of things? Let's say you really bought Nvidia, it's 3 times, then what happens? Oh, I got this cash now, then what am I going to do with the cash? Is that part of my bigger plan? Oh, this cash is meant for my retirement. Yes, I'm on track. All right, so instead of just buying, today I think not bad, he say good, she say good, YouTube say not bad, it's important to really sit down and properly allocate it. All right, so that you know the risk that you're taking, and you can sleep at night lah. All right, not go and buy this stock, that stock, just because we say this 4 stock group, you go and buy, wow. Okay, and then end of the day, why did I buy this? Now go up, what do I do? You want to sell that? Ask you're selling this, then what are you going to do? I don't know, everything don't know, then the results also don't know one. Okay, so hopefully with that, it gets you a bit clearer. If not, if you have any questions, feel free to type. If you don't mind, if you got just another 5 more minutes, we can talk a little bit more on Hong Kong. Right, I think today we've seen Hong Kong coming up quite a bit. Everybody's quite excited or jaded already. So you just give me another 5 more minutes. Maybe just I could just explain a little bit on our stand. Then yeah, we could see whether Hong Kong could really outperform this year, or was it just another false start? Everybody okay? Let me just launch my platform. Okay. All right, HSI. Okay. I think I'll use this instead. Right. Okay, so what we've seen, you can see the chart, right, everybody? All right, we can see so far Hong Kong, right, has given quite a lot of false start, right? Over the years, it actually came down quite a bit, and today is one of the, I wouldn't say rare times, they're trying to see is coming up now. I think it's a little scared. His market is actually a bit lao kui. The Chinese always like face. All right, his market is not doing as well as the US, which up 40%. This poor guy is down 30%. So I think they are really trying their best to do something. All right. So my real concern about Hong Kong is more about its policy. Okay. As we get excited, like, oh, is it coming up again? Okay. I think the main thing is also looking at the policies change lah. Right. No point trying to just cure the symptoms. Okay, because right now they are doing stimulus, they are trying to cut the reserve ratio rates. We do all those, we cut the reserve ratio, but there's no demand for the property, no demand for the loans. Then that won't really bring you far. All right, I think what's important is when we see that at least a change in the party's heart, in that sense that they really want to regulate. I think recently you've seen the fall in Tencent because suddenly one guy came up and then say like, hey, we are going to have more regulations on this. We're not going to have more new games. We're not going to release any more new games. Okay, this kind of contradicts whatever the CCP was saying. So one will wonder, like, are they even speaking to each other? All right, what's happening on the lower level, the middle government, the upper government? All right, so there's a bit of chaos there. There's not much communication, it seems. Okay, but the guy got fired. Okay, so just worry, people are concerned, foreign investors are concerned because without your foreign investors coming in, your market can't really move up. Although they say like China, you can move up by itself, but so far you can see those are just words. It's not trickling out to the market, all right? So you really need the foreign investors, you need the funds to be buying in, right? And we know that the funds are all leaving Hong Kong, China, because it's really just not conducive. It's not pro-business, so that's one thing that you have to understand. One good thing about it, they are pro-people because it's a common prosperity, all right? It might not be that good for the stock market, right? For the citizen, yes, you don't want too much disparity, bring wealth home, but if an investor, that's not too good news for you. Okay, so one good thing is really, seeing the signs whether C is changing or, just now, right now, they're telling you, oh, you cannot short the stocks, you cannot do this. This could be just really short-term implications, all right? So, and we have seen the last 2-3 years, Hong Kong has been quite on a severe downtrend. Okay, and right now, on the chart technically, you can see every time we hit this very short-term downtrend line, it tends to turn down. Will it turn down tomorrow when it hits? I cannot say for sure, because if we assume a downtrend, yes, when it hit here, it should come down already. Okay, but everybody always at this point of time, oh, this could be, this could be, this could be. For the last 2 years, so I think everybody also tired. But one day you might get it right. This could be the new wave. This could be what you see this year. It actually almost make a new low. Okay, so for the boost in Hong Kong, yes, I think we can do take a position, but do take a very calculated, meaning to say, I don't think it should be overly exposed into Hong Kong. All right, your allocation should be right. For us, it's about 20-30%. Okay, if you want to go more, it's really up to your comfort level. This could be the year that you really have a bigger reversal, but I'm comfortable with being the US, being the leader. As you can see the charts, the last 10 years, if you compare everything, Hong Kong and China, US outbeats it. All right, even a longer time frame. But if you're talking, hey, Kel, I only want to know for the 1 year, I want to make this punt, I want to take this chance, I think then you could have a better probability. Yeah, you might even in terms of percentage out to the US because it come from a very low base already. All right, so if we could even hit up 18%, I think you're already like 20% up, right? And sometimes Hong Kong can really move very fast, which you can see from here, when the time that they open up, right, in within like one and a half months, it like almost went 40-50% up. Okay, so same thing right now. You see, really does something very drastic. All right, we will take a look. Put in your MAs also. All right, so this step by step. All right, this is the 200 moving average. Okay, you can see whenever it crosses here, this line, you have to get up to this line first before even we consider. If anything else, is just taking a chance here to hopefully it goes higher. Okay, but on a technical aspect, whenever it breaks the 200-day moving average, that's where we will consider it more bullish. Okay, so far you see for the last 3 years or so, it's been always below this line. Okay, so it tried to bounce up, but still it couldn't. So China in that sense, or Hong Kong in that sense, is still very weak. Okay, so right now we hope it comes up here 18,000, and by then also the only thing is by then, of course, you will say, wow, Kelvin, 15,000 should have bought, now 18,000. I don't want to buy it either. Okay, so there's always that trade-off. You want some more confirmation, you always have to have that trade-off. Over here, a lot of people also won't dare to buy. Now, okay, yeah, I should have bought here. Because over here, everybody will be thinking, hey, it could be making this double bottom, right? And people the doom and gloom, of course, from here, it might actually come down to 14,000. All right, I think that's really on the cards. I think everybody was bracing for that. Because you can see, these are chart patterns, all right? Less of the fundamentals. Because then also, China still haven't really come up anything solid. Okay, so this was where it was lying just 2-3 weeks ago. Right now, the sentiment's changing a bit. I think C is coming out with quite a bit of stimulus. How much of it is really enough? Every time you come out with stimulus, you can see always come down. I didn't really go and do all the research in the numbers. Whenever it come up stimulus, it come down. Whenever it come up, come down, come up. So if you assume on a technical basis, when it come down here, it should come down. The moment it doesn't now, let's say the next few days, it breaks up here, then you might see a slight change in trend, right? That's where you might consider taking a position. If not, you'll just continue on the same old story, all right? Because all this is right now a lot of just rumors, just news, all right? At the end of the day, when he already announced, if it's lesser than what the market expects, the stimulus, so don't know how many trillions or what, market can start to pull back. So do be wary of that. Okay, so proper allocation. All right, I'm not going in too much into Hong Kong. I'm just holding my whatever I have. Okay, anything that I have extra, I will go punt to, I will make investment to the US. But that's just my stand. All right, so everybody's different. Make sure, like I said, you do your proper calculation. You do this, right, to ensure why you want to take on the extra risk. Okay. If not, sorry, any questions we have today really overrun because it's the start of the year, so we've got a lot of things to share. Hopefully, it just helped you clarify a little bit more. So thank you all for staying all the way. Yeah.
Let me add on something, Ken, on the Hong Kong thing.
Yeah.
I think Kel is showing the the downtrend. If we look at the monthly chart, you see this chart that I'm showing at is a long-term multiple chart. If you look at this part here, this part here, this part here is the third time, fourth and the fifth time. So it's been around since 1992. So like what Kel says, there has been a very steep downtrend since then. It's been holding at the trend line. So if she really does come out something, we hope so. Let's see how it goes. Then we might see something in the next few months. But again, based on your proper allocation, and yeah, it's like only the fifth time since basically we use this as a uptrend long-term multi-year time frame. Okay, yeah. And also sharing something I forgot to add on to the FA part. For some of y'all who are not just looking at protection, if you are looking into legacy planning, do let us know too, because lately we also have clients out there, and y'all are interested to know. So we just want to take the opportunity also, if you're keen on legacy planning for your children, you know, things like that, to let us know, and we can work more with you on that as well. Okay, yeah, thank you.
All right, so hopefully tomorrow we hear more good news from Hong Kong. All right, our FTI is a bit sleepy, okay, because main reason why, because of the banks, because the bank results coming out. I think tomorrow DBS is coming out already, okay, because right now with your net interest margin, okay, that's one of the biggest drivers. With interest rate cutting on the horizon, all right, so that's gonna bring down the books, the numbers. So I think people are not as bullish on the bank, so that's why you see our STI is not moving much, because 40% of the STI is taken up by the banks. Okay, so it's been just very slow in the Singapore side. Yeah, so
The
I
REITs
think going
as well
forward,
has
even
been affected by the yield up recently also. There's also
and
another
then going forward, his statement also is important. So I think, yeah, hopefully even with interest rate cut, then that will spark some, you know, their loans will come back. All right, because I know a lot of people, high interest rate, one of the biggest, for the bank, one of the biggest earnings is from their loans. All right, and one of the biggest loans that come from is the property loans. Right, so right now the property is high interest rate, so everybody got one word, scared, all scared. All right, all scared to buy, don't dare buy. Only the new launch doing well, for some only. All right, so generally everybody take a bit of the wait and see approach. Okay, so if interest rate really start coming down, then we might see a new revival. All right, so right now it's still around 2.95. I think I got the latest quote, yeah, about there. So, you know, it's starting to come off. So hopefully that will spur some interest in all this. Okay. Any questions you've got? If
okay, and also just for those who want to stay, I just want to share one more chart on what Kelvin's saying, just to build on it. If you see this chart, I think Kelvin was sharing one part of it, but I just want to share a more detailed one. If you look at this S&P 500 chart, you guys see this channel here, right? This channel here. Now we are at this channel.